Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program. First, let us see what happened last week. The last week, the markets were highly volatile. And in fact, the February expiry, Nifty closed around 15,100. From 15,100, it came all the way below 14,500 in just one trading session. That was the last Friday. And then the next 2-3 days, the market again shot up to 15,300. And then again, the last 2 days were very terrible, and both days the Nifty gapped down 200 points and intraday fell about 300 points. And like that, the markets were hugely volatile. And what happened last Friday? The US jobs data came, which was an excellent data. But despite that, in the beginning of the trading, the Dow was very volatile. But towards the end of the trading session, the Dow Jones shot up more than 600 points. And Nasdaq also closed firmly in green, and after having a lot of losses in the previous days. And in India, the Nifty future closed around below 15,000. I think it is 14,970 or something like that. And on Friday night, due to the recovery in US markets, the SGX Nifty closed about 100 points higher. It was trading around 15,075 or 76. So on Monday, we are likely to gap up about 100 points. And more importantly, today, some economic data that came from China is really very impressive. It was a export-import data. Last month, exports increased 18%, but this month, exports increased 60%, which is almost 3 times higher than the previous month export increase. And people expected about 40%, but it has come above 60%. And import also, previous month import was about 6.5% increase, but this month it is 22-point increase. And people expected 15%, but increase is more than 22%, 22.2%. So this very good economic data from China surely is going to have some positive effect on Hong Kong and China markets tomorrow, and along with the US global cues. And tomorrow, the Asian markets are likely to open very much in green. And we can expect, due to the Singapore Nifty indication, we can expect Nifty to open at least 100 points higher. But however, there are certain risks. And recently, we have been seeing some FIIs are using this rally to book the profits on huge quantities. And last Friday, and FIIs have sold for 2,000 crores and DIIs have sold for 1,000 crore. So 3,000 crore of selling by the institutions. Who bought it? Retail people. So one thing is that from institutional side, the support is not very good. And even in F&O also, the FII's long position is very little. They have a huge short position. And in options market, I think last Thursday, they bought for about 13,000 crore worth of options, and 2/3 of that options are put options. Well, they are all on the negative side. But now let us come to the positive side. And because the markets are hugely volatile, and making big moves. And what happened last week when the market fell and so much of people have written 15,000 call options aggressively. And in fact, that day I told 15,000 call option has the highest open interest, but during this kind of situations, highest open interest do not work. The next day, the market went to 15,300, resulting in huge losses for those writers. And I am expecting something like that in the next week also. Why? Just look at yesterday. Yesterday, 15,000 call option. And you know what is the volume added? 1.5 million shares. So 1.5 million shares are added in the open interest at 15,000 call option. But tomorrow the market will be opening much higher than 15,000. So if the market sustains the up move, then these people will have to run for cover, propelling the market even higher. And it is not only 15,000, 15,000, 15,100, 15,200, they all have added and huge open interest. And there was hardly any put writing on Friday. It was all about only call writing. So there's a huge amount of calls are written, and if there is a big gap up and if that sustains, and these people will be in trouble. And that will make markets to move even higher. And when it comes to economic data, there is nothing much. And coming Friday, we will have index of industrial production data and consumer price inflation data. That too will come after the market hours. The impact will be only on the following week. But coming week, Thursday is a holiday. So therefore, we have only 3 more trading sessions for this weekly expiry. But considering the fact there are only 3 days for the weekly expiry, the option premiums are really very, very high. One, market is making big move. And number 2, due to this new SEBI regulation, the number of sellers is going down, the number of buyers are going up. It's creating a demand mismatch. And that is also one of the reasons. And third, most important is that due to the margin benefit and people who are selling options at the nearer strike price, they are buying option at the far out of the money. So due to this, the far out of the money options premiums are fantastically high. Market was trading around 15,000. The 14,000 put option was trading around 20 rupees last Friday. And we have only 3 more trading sessions. I think it was closing was around 11 rupees or something like that. But still, 1000 point away, 3 trading session, more than 10 rupees is a very, very good premium. So I was worried as an option seller with this new SEBI regulation, will I be at a disadvantageous position? But now I'm thinking I'm actually at an advantageous position. Yeah, anyway, I'll come out with a separate video later on this topic. So for the time being, if the global markets are turning around and Nifty will have the ability to push towards 15,300, that is the last week high. And because there are only 3 days for the weekly expiry plus 1 day Friday, so I'm expecting Nifty to trade between 14,500 and 15,500. And for monthly, there is a very, very strong support at 14,000 put option. No matter how much market falls, the 14,000 put option, there was no unwinding at all. In fact, the open interest keeps adding in that, and there is no unwinding. So that shows that 14,000 is a very, very, very strong support for the rest of the month. But for the next week, the 14,500 will be a good support, as I see a lot of puts are added at that strike price. And call option, those who have sold the call option as 15,100, 15,000, 15,200, they all will be in trouble if the market turns around, and these people may have to run for cover. and because of that the markets may go even higher, and up to Wednesday we can expect 15,300 to 15,350 as the range, but because this is a weekly analysis, we can expect 15,500 as the resistance for the week. So disclaimer, so this is just my analysis and my gut feeling based on the open interest and other things, and as I always say my disclaimer, I have a right to be wrong. Please consult your financial advisor before taking any position. Thank you for watching.